Welcome to Accounting Yard YouTube channel.
So that we get everything that was covered in today's class. So my name is Oladilu Dubemi. Welcome to Preparing Management Accounts by Accounting Yard. So I'll just tell you a quick story, right? So two things that came to mind, right? One of the reasons why this class was created was one, someone asked a question about preparing the management accounts in the group. I don't know if that person is on this particular training, that he wanted guidance on it, and that's one of the reasons why this was created. Another one was that recently again, someone shared a particular management account that needed to be created for a particular job. So a particular job the person applied for, one of the things that was required of the person was to prepare a management account. Not to prepare a management account, prepare a consolidated management account, right? So that also came to perspective. Then recently, also talking with people that are quite experienced, and they say that it seems that we don't really have a lot of good accountants out there. And trust me, as an accountant myself, I feel very bad. And I know someone that said in his company has changed close about 9 accountants in the company. Why? Because he felt that he was doing better than what even the accountant was doing in terms of managing the books. And one thing he made emphasis on was around reporting and analysis. So from that perspective, that really touched me, and I said, why? Okay, I know this stuff, right? It may not be as detailed as we would love it to go, but obviously based on the outcome of this class, we would know whether to create a more deeper section of this, right? But let's even first touch it, and let's even get people familiar with it. So that's one. And so I'm happy that I'm getting feedback that people really understood what was taught last class and able to apply what was taught, right? And based on that, I'm encouraged to take out the second section of the class. I was first almost surprised that a lot of people were not available around 5 o'clock. I think at exactly 2 o'clock, there was only one person. I was surprised, wow, I see that people were not really encouraged from the last class, but at least with the number of people that got added within the last 10 minutes, that shows like people are interested. I know last class were over 50. I don't know if we attain 50 today. If you attain 50, good enough. If you don't, no problem. I think 20 for me is a good number to work with, and we can share knowledge together. So last class, this is a quick overview of the last class. Last class was basically around Excel. So what I tried to do initially was explain how Excel would help you in preparing the management account. So we worked around some basic functions. We worked around using dates. We worked around using VLOOKUP. We worked around SUMIF. Those are the focus points for us. The next thing we did was we also did the cover page and the table of contents based on the management account, right? So based on that, we were able to do that completely last class. If I remember correctly, I think we also completed the mapping of the trial balance, right? So that's what we covered last class. Now, if we've done all that, the next step will now be preparing the management account itself. I'm going to share my screen now. So I think this was the last class. And I think I promised to explain where to use the VLOOKUP through, right? Before I start the main class. Yeah, someone is asking a question. Let me see. Okay, so recorded video is on YouTube. Okay, so like I told most people in the last class, you can easily just watch the last class from the YouTube channel, and you can also get other content from the YouTube channels. Yeah, so that's the last class. But the truth be told, if you did not follow last class, some things you most likely struggle with this class in a little bit. That's the truth, right? But you can subscribe to the YouTube channel to get access to the last class, right? And that will be fine. So what I said basically now is makings of the VLOOKUP true, right? So a typical example of what I used then was, if you look at this, at times, usually for most businesses at times, they will tell you that how they give people how much they will collect in bonus is based on weight. So that means after you have done the performance appraisal of employees, you assign them scores. Now, if your score falls between, let's say 0 to 50, 0 but less than 50, you get 20% of your annual gross salary. If you score between 50 to 59, you get 50% of your annual gross. If you score between 60 to 79, you give 100% of your annual gross. And score between 80 to 100, you get 150% of your annual gross. Now, so that's the weight. So now what VLOOKUP true does is that it doesn't do an exact match. So for example, as I'm here like this now, if I want to get the weight, now 56 falls between 50 and 60. Automatically, what will happen if you use a VLOOKUP tree is that it will give you 50%, right? And that's what applies. So I made them understand that if you use VLOOKUP true, you can get the weight applicable to each of these scores based on that here. I also explained to them that if someone is doing more like, let me say, aging, your AR, right? Your AR, aging. You know, if you have a list of outstanding balances, right? Aging is basically saying, how old has this balance been? How old is this particular balance, right? So I know that in your aging, what happens is that you have bands. So you can have like not yet due. Yeah. You can have between 0 to 30 days. Yeah. You can have between 31 to 60 days. You can have between 61 to 90 days. And you have like 91 and above, right? The idea is that the moment anything, when an invoice is not yet due, it falls in this category. If an invoice between 0 to 30 days, right, it will fall within this band. If an invoice age is between 31 to 60, it falls within this band. Now, a way to get this is to use the VLOOKUP when it is true function, right? So not yet due means that obviously, based on credit terms, if you add credit, so you have an invoice, let's say for sake of argument, an invoice is dated, let's say 30th September, right? 2020. If the customer has a 60-day credit terms, right, it means that this invoice will not be due until this date, 29th of November. If we are looking at it based on today's date, the age of this invoice is automatically this minus this, right? This is minus 29. Automatically, that invoice is not yet due. It will not be due until this date at a minimum, right? So automatically, anything that is less than 0, for the sake of argument, let's put minus 200. Yeah? Anything there is not yet, anything between minus 200 to 0 is not yet due, right? Because obviously we don't expect that I'll give any customer more than 200 days credit term, for example, right? Between 31 to 60, right? So we can easily put 60 here. Sorry, we can easily put 31 here, which is the next one, right? You can put 61, and you can easily put 90. The idea is that the moment an invoice point between 0 to 31 is this band to fall into. If an invoice point between 31 to 60 to fall in this band. So let me just show you the example based on the weight here and apply it in this scenario. And you see how you apply it. And you can also apply it I'll send an example whereby you can apply it to aging of an invoice. So let me do it simply. V is equal to VLOOKUP, right? Select this, comma, the array, which is this. I lock it with F4, comma. The value, what I'm looking for is column 1, and this is column 2. So I'm looking at in this column, which is column 2, right? So I just need to put 2 there. And I choose true and not false. I close my bracket. And I double click. At the edge here, and sit here. Now, let's quickly look at it. 61. 61 is greater than 60, but less than 80. What rate do we have here? Is it not 100? Can you see that it's gotten 100? Let's look at 56, for example. 56 between 50 to 60, right? It's greater than 50, but less than 60. 50%. Can you see that's applied here? So automatically, we'll be able to get the weight of all that we applied on the bonus. So I can easily do the weight times the person's annual salary, and I get the figure here. And I can press Ctrl D to get me the answer for everybody. And that is how you apply VLOOKUP when it's true. Does anybody have any question? Yeah, any question?
No have question. Right on, sir.
No question. All right, no problem. Let me check. Okay, nobody. So let's continue. Right. So based on that, I've done the VLOOKUP when it's true. So I think, I don't know if there's any other commitment I made from the last class on Excel that we're going to talk through again. Yeah? Okay, in the absence of none, we'll move to the next phase. The next phase is not the manual account itself, right? So let me open what we did. Okay, now this is data. Hold on. Let me see. Okay, I think it's draft. Let's look at it. Yeah, this is draft. So last class we prepared this, which you call the cover page. We determined the table of contents, and if you click here, it goes to the sheet where we're looking at, right? And we did the date function so that if we change the date to 23 and we change here to 6th, it automatically changes and the heading changes at the top. If you go to TOC sheet, it also changes. Let's see, someone is asking a question. So now, false is when you want an exact match. True is when you don't want an exact match, which is the example we applied here, right? So if you want an exact match, we'll use false. But if you want an approximate match, we use true. And that's we applied, we are showing an example of how the true works in this particular scenario. So last class, we did the false version. Okay. So we showed this, right? And we showed the cover page, and we showed our trial balance where we mapped everything, right? Where we put all the classifications. Now, the next thing is ask ourselves, like I said in the last class, we'll move from TB to notes, right? From notes to the face of the primary statement, which is your income statement, your balance sheet, or your statement of financial position, and your cash flow statement, right? So we'll take our time and do this today, right? We'll give you a brush up of cash flow, then tomorrow we'll focus on just the cash flow alone so that we can give enough time to walk through the cash flow seamlessly so that anybody after this class should be able to conveniently prepare the cash flow. And I even explain things that were not even in this particular scenario and how to handle them, right? So now IS, Victor Avolabi, okay? So now let's go to IS, right? So the first thing I ask myself, based on the nature of the business, what are the things that will make up my income statement? Now, the first thing I explain to people about manual accounts is that manual accounts will have the period they are reporting, right? Which we'll call actual. Yeah. We'll have what we call our comparative. Our comparative is either, it could be budget, it could be last year of the same period, right? So let's call it comparative. Now, the idea is that when we prepare a manual account, we want to be able to assess performance, right? If you just prepare a manual account whereby you're only showing the actual figure of current figure, you're not able to do any form of analysis, right? So to be able to do an analysis, we need to have either our current year balance with our comparative, which is the same period last year, or we can use budgets. Those two will give us something close to that can help us identify how are we doing. How are we doing against last year? How are we doing against budget? You can often have both as your comparative, right? You can have your prior year actual, and you can actually have your budget to be able to do some level of variance analysis, right? If we're following through, next thing is that we need to put the currency we're reporting in. The currency is most likely Naira, so we'll put Naira, right? Naturally, I will just copy this and bring to my IS and paste here, which is the name, right? And that feeds in the problem, what I want, right? I've done my comparative. I try as much as possible for these two to be the same size. It makes it sweet. It makes it look very creative. I can put it in the middle, right? And I can bold in it. Don't forget that I also need to put dates, right? I can put equals to. Don't forget last class, I think we already made use of a name range. So name range, current period, type it and press enter. Same here, comparative period, and press enter. The formatting is showing a number. Last class, I also explained what we know as 1st of January 1900, and I also explained to you that you can press Ctrl semicolon to get current date. I made you understand that Excel knows 1st of January 1900 as the first date of the financial year, which is 1, right? And it can convert current date to this format. This is the number of days between 1st of January 1900 and today's date. And that is why you are seeing the numbers appear as this. However, we don't want it in this format. We want to express that in date format. So I said I'll press Ctrl+1 to bring out my custom format, click on custom and choose custom format. What I want is just the month and the year. I don't need the day, right? So I can choose, for example, this, come to the top, take out the D portion and put in the Y in 4 places and I press OK, right? Also put it in the middle. I can bolden it, right? Now, usually, if you are doing income statement, what's your normally the first line you report in your income statement? First line in income statement is what? Let me know which line. Revenue, good. Revenue.
Revenue.
So yeah, okay. So basically what I'll do is that I will pick everything here, come to my IS and paste them here, right? I know that after my income statement, well, after revenue is cost of sales, right? After cost of sales is what? It's gross profit.
Gross profit.
Yeah. So I do that here. Can minimize this, right? I have that. After gross profit, I can have operating expense. Sorry, I can just copy this and paste it, right? Now, based on the nature of business, some people may report depreciation within operating expense. However, depending on the nature of the business, you may want to report certain lines which are key to the business. A typical line that is key to some business is what you call EBITDA. And EBITDA is earnings before interest, tax, and depreciation and amortization. As a result, in this particular scenario, we separated depreciation and amortization from operating expense to make it easy for us to derive EBITDA, right? Based on that, we can easily bring in depreciation and amortization on a separate line, right? Now, by the time you deduct depreciation and amortization, what you have next is what? Can someone guess?
EBITDA.
Yeah, after you take out depreciation and amortization, the next thing you have is what you call EBIT. Earnings before interest and tax, right? The moment you have this, the next thing is you bring in your income tax expense, right?
Yep.
This EBIT, someone else could have called it profit before tax. Yeah? So no, not profit before tax yet. We've not done interest, right? So if we have interest expense, we can bring in interest expense here. By the time we deduct interest expense, what we'll be having is profit before tax. Yeah? And by the time we deduct income tax expense, what we'll be having is our part. Yeah? So this way, we've derived all the components. Now, if you notice, I left a column here. This column is for our notes. The idea is that as much as possible, we want to show that we have a note, right? And that note will give us a breakdown of certain GL lines or certain face lines on the financial statement we're interested in. So for example, your operating expense may have more than one component, right? It can have staff costs, it can have repair and maintenance, it can have rent, it can have professional fees, it can have travel and accommodation, it can have other expenses. So you will not have all that breakdown on the face here. What will you have that is at the note level. So what will happen now is that we'll have that breakdown at the note level and we'll move it here, right? And we're fine at that level. So now this way, right, we've been able to identify hold on. Yeah, we've been able to bring all the various lines, right? All the lines. So that way, we've done income statement, right? The next one we'll be doing now is our statement of financial position. Similar process will follow, right? So like we did here, we'll copy and paste everything we have here. Bring it to this place, paste it, yeah. I have it clearly. This I can reduce, this I can increase. Usually your first line here is your property, plant and equipment. I'll go to my DV sheet, bring out all my lines all the way to equity. Yeah, come here. Now, one reason why I like ensuring my naming convention is consistent. It makes my life easy, right? So PPE, I bring my PPE here. Yeah. After PP, the next non-current element is my intangible. At the end of the day, when I add all my non-current assets, I have total. We have non-current asset as my total here, right? I can bold in it. I can actually select this and take it in a little bit so that someone will know that this is a subset of this, right? Next is my current asset. Someone else could actually put this at the top, right? And come here and put current assets, bolding it. Since I make up my current asset, I have my inventory, I have my trade and other receivable, right? In the last class, we explained that trade receivable, prepayment, other receivable are all components of this. So we don't need to bother ourselves. So you can bring in inventory, trade, and other receivable. Yeah, here. You can bring in our cash too. Yeah, that's all the business has for current assets. Like we did in that place, we also bring it in a little bit and we have it here, right? Now, the next part is my current liability. The idea here is just basically we're building the financial statement, what should look like, right? I can easily click here, go to home, click on paintbrush, and click on this, and we have it here, right? Here, we can bring our trade payable, trade and other payable, right? In this particular scenario, another thing that we need to bring is our income tax liability based on the scenario we have here. Yeah. We also have our short-term borrowing. Yeah. So that then we have our total current. Next, you can bring in our non-current liability. Yeah. Here, we easily just take it in one step. Yeah. So non-current, I don't think we have anything other than the borrowing itself, long-term, right? Click on this, right? So the next part will now be our equity. Equity, we can have share capital, and we have retained earnings. Yeah, so I can bold in this and take this in. Yeah, now that we're done with this, all we need to now do is we've created a structure of our income statement and statement of financial position. Do you have any question at the moment before we move forward? Okay, we have a question in the chat room. So someone said, what about prepayment? Okay, so let me explain. In the current scenario, we've lumped up prepayment within trade and other receivable, meaning that at the note level, we'll break down our trade and other receivable and show prepayment there, right? Someone else could actually separate them depending on what the person wants to achieve, right? But the approach we've taken is that we've lumped up prepayment within trade and other receivable, and in the note within trade and other receivable, we can break it down. So, and that's the approach we've taken. Yeah? Any other question? Okay. In the absence of no question, the next part will now go to the note, right? So similar to what we have here. One thing I forgot to mention is that here we can now start introducing the titles. So here we said this management accounts. Let me delete this, right? But in management accounts, what we are in management accounts currently, this is statement of financial position. So statement. Yeah, and we can format it with this same thing. Yeah, same thing with income statements. You can put income statements. Yeah, and we can also format it too. Yeah, and we have it there. So as much as possible, we may just, if we want to, we can actually just make it bigger slightly. so that it takes some level of prominence above the period we're reporting. Right. Yeah, so we have that part. So now we can also copy this to the note level. Yeah, and we can now put notes to account. Yeah, and we have that. So similar like we had in the statement here, we can actually just copy our comparative and bring it here. Yeah. We don't need the note reference here like this, right? What would happen is that we'll put in a number here for all our note references. Span like this. So now, like we said, usually, most times people try to make it properly structured. We can start with income statement, and as it goes down, so automatically we know that our note revenue is note 1, right? We know cost of sales is note 2, operating expense is note 3, depreciation is note 4, amortization note 5, interest expense is note 6, income tax is note 7, right? Statement of financial position. PP already will fall with same note where we have depreciation. So we can just put here note, I think it's note 4, intangible note 5, right? This one is new. We'll continue from the last note we stopped here, which was note 7. We'll come here and put note 8, note 9, note 10, note 11. Income tax, we already have something in the income statement, and income tax was note 7. So we can just put income tax liability, we put note 7. Borrowing, we put note 8. Short-term borrowing and long-term borrowing are the same notes, so we put note 8. Equity, we can put note 9, and return earnings note 10, right? Yeah, sorry. 12, 13, 14, 15. Obviously, there shouldn't be duplication of note references, except they are the same thing, right? So you've gotten that. The idea is it's best it follows the sequential order, because as much as possible, if someone is going through the account, when the person comes here, the person should be able to follow the order, right? It shouldn't come here and what is in note 1 is revenue, note 2 is now PPE. They should follow each other, right? And that's best practice. So you need to understand that that's important. It shows the fact that you understand how data should be structured and that things should actually follow an order, right? So you need to understand that bit. So like we said, revenue is the first line, revenue, right? Like we did for the other thing, then we copied all the note references. We can copy here too again, everything, right? And bring it to our note level. So that when we need particular data, we just simply copy it and bring it. Yeah? So revenue is the first note, and we know that's what our note 1. We know that our revenue, there are cases in which if a business has multiple streams of revenue, you may not have a breakdown of the streams of revenue, right? Broken down into the 3 components. For the sake of this class, we are assuming that we have only all the revenue as lumped into one category. But based on the nature of the business, they can decide to break down their revenue into the various streams of revenue. Imagine maybe a business into a restaurant business, for example. They want to be able to break down their revenue from food, separate from revenue from drinks. So they can have that breakdown, right? Some may want to break down their revenue based on SKU. So for example, let's look at Nestle. Nestle sells Maggi, sells Milo. They want to show the revenue that comes from Milo, separate from the revenue that comes from Maggi and all the other things they sell. So depending on the nature of business, you can break down your revenue based on the various streams, right? So that at the end, when you aggregate everything, it should equal to your total revenue. But in this particular scenario, we are not really worried about that breakdown, right? But I'll show you a scenario where we have a breakdown and how to apply it. For this particular class, just revenue, just one line. So you can go to the next one. Note 2. We call note 2 to be what? Our cost of sales, you remember correctly, right? Cost of sales. Now, if you look at cost of sales, let's go to our mapping of our trial balance. Cost of sales too does not have a breakdown, right? But imagine if you wanted to have a breakdown, we want to separate staff costs, for example. So we can have a breakdown called cost of salary from consultants, maybe venue costs, right? Let me just copy this. Yeah. So let me salary of consultants, venue costs. Then maybe I can put that under other cost of sales. Or others, let me just put it that way. Yeah. Because of these two are key to the business. I want to know how much we're spending on salaries of consultants and all. So now in this particular scenario, we have just one GL, but it's possible that we have multiple GLs and we're putting them together. You know, normally if you have, for most businesses, or if best practice when you're dealing with something like staff costs, it's always good to break down your staff cost GL into components. So for example, what are the components of someone's emolument salary, right? You can have, for example, you can have basic housing. Yeah, you can have transport. Yeah, you have other allowance. When you are paying salaries, it's usually advisable to have GLs broken down into these components and some other elements. The idea is that, for example, there are some things that maybe for regulatory reasons, you pay the government a particular amount based on basic or based on housing, based on transport. You want to show everybody when you look at the GL, if you add those GLs and you apply that rate, you can see the value once. You don't start producing a schedule to show, oh, these are the figures, right? At the GL, at the face of GL, or the face of trial balance, you can easily do that computation and confirm they are complying, right? So that also depends on the size of the business. You may want to break it down, but that's the lesson from that class, right? We're just explaining something to you there. So I'm just showing you this, and we're not bothered about the breakdown of revenue. So for this, based on this example, we have 3 lines for cost of sales. You can easily go to our notes and come here and break it down based on those 3 components, right? And clearly, right? I can go to note 3. Our note 3 based on the class is operating expense, right? Operating expense. And we've clearly said that operating expense is broken down into, let's go there, TB. Okay, I think during the class, did we break down? Okay, we didn't break down operating expense based on last class. But now, based on the nature of the business, right, you can identify classes that will make up your operating expense, right? So for example, in this particular class, we'll look through it. For example, see all this, right? If you look closely, these are all staff costs, right? So I can easily identify it and change this line to staff costs for all these GLs here. Yeah, so staff costs. That's an example of GLs that make there, right? You can see rent. I can easily create a category for rent. Yeah, I can put rent. I can put, for example, anything, or let me not call it rent alone. So anything that has to do with the building. So I can call it maybe rent and property expense. Yeah. So security is part of my property expense. Service charge part of my property expense. So I put all that within that category. Fines, I can put fines under other expenses. Yeah. Or other admin expenses. Let me put other admin. Let me call it other admin expenses, right? Now, audits and legal are professional services. So I can put all these 3 under professional services. Yeah. So I can put my transport and local deeds under other admin expenses. Staff welfare is still part of my staff cost, so I can put that. Transportation, I'm assuming is part of, okay, that's, let's call it transport. Let's just call it travel expenses. Yeah. So staff welfare, let's put a part of our staff cost, right? Bank charges, let's put under other expenses. You can call this marketing and advertising expense. Yeah, here. Car repair, communication, delivery, diesel. Okay, diesel we can call it part of property and rent expense for the sake of this class. The idea is, what we need to understand is that whatever category we are putting there is based on the nature of businesses and also the critical classes of expenses that the business is interested in. Don't forget that the main account is going to help you make a decision, right? So you need to understand the various classes of expenses that the business is interested in knowing and classify them into those categories. That's what I'm basically doing. So I'm just making some judgments here based on on the information we have here, right? Like I said, I can put delivery and communication under other admin expenses. Car repairs, for the sake of this class, I can call it repairs and maintenance. Yeah. So with this, we've done all the classes of operating expense, and I don't think we have anything under operating expense anymore. So I'm done with that part, right? I think there's no other class we need to do. Okay. Wow. Okay. Another class that we did not do last class was our trade payable, trade and other payable breakdown. We are done intercompany, we have put other payable. So all this, like last class, I think I mentioned the fact that we could actually just call them statutory payable because all of them are actually payables that we need to make based on statutory obligation. So you can put them, can call it statutory, someone else can say statutory dues, someone else can put statutory payable. Just to know how much you owe in terms of indebtedness to the government based on certain deductions that we make, right? We can call them statutory payable. That's another class. Like I said, the idea is to be able to classify this into breakdowns that we're interested in, right? And which I've done. I don't think there's any other breakdown we need to do. For the person who asked about prepayment, if you see this trade and other receivable, our trade and other receivable is broken down into these categories, and we have them here. So that's already, we are done, right? I don't know if anybody has any question along this, what I've done here so far. Any question?
Hello, why? Hello?
Yeah, I'm listening to you.
Okay, I just wanted to clarify. You said that this company in question is a service firm.
Yes, it's a service firm.
And I understand that's why we have staff cost as cost of sales. Now, I'm wondering why we still have cost of sales as operating. Sorry, why we still have staff cost as operating expense?
So there are two things involved, right? Now, don't forget that even the fact that we are saying that we are a service or a consulting firm, there are some cost of sales line that we can actually attribute to how we generate revenue. But there's some staff costs that we can attribute to how we generate revenue. There are some that are not directly tied to revenue. So, for example, let me give you a business that has admin staff, like, for example, finance. Finance is not generally associated with revenue generation. They will just be what's called it administrative in nature.
Yes, you're right. You're right.
So
yes,
they are bottom. Do you get? I can have people that are involved with maybe procurement. They are not revenue generating. They are still admin. Do you get? HR is another example. They're not revenue generating. They are admin. So that way, despite the fact that the consulting firm, they can still have lines that will fall within the admin expense.
Yes, you're right. Yeah. Thank you very much.
No, you're fine. Any other question? Any other question? If there's another question, I will continue now. Okay, now that we're done, let's go back to our notes, right? So we're done cost of sales, operating expense, right? So let me, double click. So now we need to bring down the breakdown of what makes up operating expense. At the note level or at the mapping of the TB, we identify staff costs, traveling. Oh, there's still operating expense here. Call this repairs and maintenance and call this other expense, right? So I can pick other expense, marketing, repairs and maintenance, property rent, staff costs, traveling. Yeah. So I can go to my notes and paste them here, right? The next note will be my notes for, I'll call it property, plant, and equipment. Yeah, but at this level, what would happen here is that I will show you PPE and I will show you depreciation, right? But what I'll explain to you now is that I think I created a video around creating a movement schedule, and which you can watch on YouTube, how to create a movement schedule. You can have that here. So normally what will happen is that depending on the nature of the business, some want to have some people can have the asset register and just link the balance on the asset register here. That's if the asset register tallies with their GL, which should be the case, right? Another one is that they could prepare a movement schedule and have it as a separate disclosure and link between here to that note, right? What I've explained here would also apply to, let me copy it and paste here. Now, why you see me always copying and pasting is that it's always very important that the naming convention is consistent for us to be able to use some if. And I'll do that for intangible too. Copy, bring it as a title here. So I have a category called intangible. Then I have the amortization as a separate line, right? These two, best practice is to have a movement schedule and link for the movement schedule here, right? Now, the next step is we've done intangible based on our income statement. The next thing is interest expense. And I go to my notes. I pick my interest expense. Yeah. Interest expense. Let me go to my notes 7. My note 7 is income tax. So this particular one, I'll put income tax as my note. Now, income tax, like I said, income tax, most times, the best note for income tax is a movement, right? You have your opening. Yeah, you have your charge for the year or your income tax expense for the year. Yeah, you have your payment and you have your closing, right? And this part breakdown in this format will help you in preparing your cash flow, right? Clearly defined there. So next thing is our note 8. And note 8, based on what we defined here, note 8 is on inventory. I don't think we have inventory in this particular scenario, so because of the nature of the business. So just keep note 8 and move to note 9. I don't want to delete it, but let's leave it there, right? And we'll put inventory. Let me just...
Third from top, is there? Third from top.
Third, thank you very much. Yeah, inventory. So like I said, if the business has inventory, it's possible that the business can have categories within inventory. For example, you can have finished goods. Yeah, you can have raw material, right? You can have spares, you can have consumable, you can have work in progress, right? And you can have other items. Yeah. Some people may even have the allowance for what's called it, yeah, like your provision, right? So that means for impairment of your inventory, whereby you have inventory that are obsolete, right? You may want to have that provision to be a credit and there's a line there. That depends on the business need, right? Just for the sake of example. Note 9. Yeah. Note 9, trade and other receivable. Now, we explained that this could be broken down into components. If you look at here, trade receivable, prepayment, and other receivable, these are the three components, right? So I can easily just have them here, and I'm done with that bit. Our note 10 is what? Note 10 is cash and bank, right? Notes. Within our cash and bank, we can have, let's go to the notes, TB level. So some people, because of the nature of their business, right, they can actually have their cash broken down, right? So you can have maybe your bank. So it's, for the sake of this class, I want to break it down, right? They can have bank, they have maybe cash in terms of petty cash, right? Petty cash. It's possible they have fixed deposits, right? They can have fixed deposit. Any other thing that is in form of cash and cash equivalent, they can have those breakdowns. So they want to see at the cash and bank or cash and cash equivalent notes. You want to see all the breakdown of the elements that make up that balance, right? So you can have it at that level too. But in particular example, we have just these two, and we can come to our notes and have that breakdown also clearly stated there, right? Note 11. Our note 11, based on statement of financial position, is on trade and other payable, right? You have a trade and other payable. We can go to our mapping on our trial balance. What is the breakdown we want to have? We want to have trade payable, we want to have other payable, we want to have intercompany, we want to have statutory payable. You can copy all four, bring to the note level, and paste it. Notice that I'm using the names as it appears there. The essence is to ensure that there's consistency in name. Otherwise, your sum if may not work. So this is very important. I'm laying emphasis on this because someone will write a sum if and see that it's not working. The moment you make an error there, if one is off, automatically everything is lagging. Yeah?
You missed income tax payable.
Don't worry, we'll get there. Don't forget, we're following the order. Income tax payable is the next note, note 7, right? And if you look at it, you remember very well, we mentioned that at the note level, we showed income tax here. This note already addresses income tax liability and income tax expense. My income tax liability will be the closing figure here. My income tax expense will be this line here. Does that make sense?
Yes, it does. Yes, it does. It does. Right.
It does, right? Okay.
Yeah.
Yeah, good. Okay. So after trade and other payable, the next thing was short-term borrowings. So like I said, borrowings will have its two elements and we'll have it as a note. So we can easily come to the note, call this note 12, call it borrowings. So let me go to my face of my notes, copy this and this, come to my notes, bring them here, right? And I can call these borrowings. Yeah, and I have my short term and long term so that the sum of them give my total borrowings, and that's note 12. Here, okay, I call this note, this is note 12, note 12. It should actually be 12, 12 because I'm not same borrowings. It can be 13, and this is 14, right? The next one is share capital and retained earnings. At my note level, 13. So share capital. Yeah. So in share capital, you can have your share premium separate from your nominal value, right? And share capital is best disclosed as a movement, right? Which is similar to how we have for income tax. Why am I saying this? Things that involve movement are good because one, it will help you in your cash flow, right? So for share capital, we can have an opening share capital, we can have issued shares. Yeah. And we have our closing. Yeah. So we can have this for share, the nominal value, and we can have for share premium. But for the particular class, we don't separate share cap, the nominal value from the premium. So don't worry. The next one is note 14, which is our retained earnings. Right? Retained earnings too should come as a movement, right? You should have your opening, you should have your profit for the year. It's possible you have dividend that you declared dividend, if you have, and you have your closing, right? And we've done that. So with this, we've been able to create the note that we require, right? Like this, 80% or 90% of the work has been done. All we are doing now is just formula. Formula all the way. And you see how easy it is. I'll write one sum if, repeat it twice, so that everybody understands what is involved, and voila, we are done. So this is it. Is equal to sum ifs, sum range. We go to our TB sheet, right? Select the sum range. Yeah, comma. The criteria range, comma, and the criteria itself, which is this, and we close it. Yeah, for the sake of this class, I'll use absolute. All right, absolute is a function in Excel that helps you. Let me change back this our dates in our cover page back to 2020. December. Yeah. So absolute is a function in Excel that returns a positive value, regardless of if the value is negative or positive. So what do I mean? So this is -2, and this is 5. If I do equal to absolute, and I select this cell, and I close the bracket, it returns a 5. If I do equal to absolute, and I select this -2, and I close the bracket, it gives me a 2. So that's what absolute does. Don't forget, at the face of the note, I don't need to show whether it's negative or positive. Automatically, we will just show everything as positive values. When we get to where we need them, we can now put the signs and be consistent with the signs we use, right? So this is revenue, right? I would tell it to stay fixed on column C, which we explained in our last class talking about mixed referencing. So I press my FN key and F4 until the $sign appears only on C. If you look closely at the top, it's only on C, and I press enter, and I have that, right? I can easily copy and paste this formula here, and I get that. Now, if I come here, close here, yeah, full figure in this format. If I go to my TB and I go to revenue, for example, if I add all my revenue lines, it's giving me 59,707, and the other one is giving me 64,234. If I go to my IS, my note, sorry, 59 and 64, meaning that it's giving the figure correctly. Now that is one, that's for this side. But don't forget that if I copy this formula and paste it here, it will give me the figure I'm looking for, right? But I don't want it. Okay, hold on. I need to check something. Okay, so I noticed something which I'll correct. If you notice the formula, this is column C and column BEE, right? I see the value. If I go to my trial balance, right? If I move to the right, the value will move from this column to this column, which is right. But for my criteria range, I want it to be on column E. So if I go to my notes and I look at the formula here at the top, you see that it's C and E, right? If I go back to my table, this is C and this is E, which is fine. Come here. If I come here, you see that it's D and F, meaning that it has chosen here as D and making use of this place. But I want it to be here, but this one should remain fixed on E. So I go back to my notes here, press F2. In my E column E, I can easily make this an absolute reference, right? F4 to make it absolute. So that if I copy and paste here, it works, right? If I move it down here, it also works. And it works here too. Now, but like I said, I don't want it to be showing me total cost of sales. I want to give me the breakdown of cost of sales. So I'm going to write the formula again. It's equal to sum ifs, right? Go to my table of contents, contain trial balance, select the values I want to sum, comma. But this particular one, I want it to sum on this column because that's where I have my cost of sales broken down into components. So I can select that column, right? And I can press F4 to make it stay fixed on that column because I want it that way, comma. Then the criteria itself, my criteria is salary of consultant. I can close it. Yeah? Same, hold on. Okay, then also I forgot to make stay fixed on column D, which is my criteria itself. I want it to stay fixed on column D. Yeah. The idea, if you look at it, if I press F4, sorry, if I press F2, sorry, you see that the formula, the criteria has moved to this column, which is not what I want. I want it to be here. And that's why I explained the concept of absolute and relative referencing. But now, the way I've done it now is so that if you look at my criteria, the dollar sign is on D, so it's fixed on column D. So if I copy and paste it here, it shows the value as I want it. I can now drag it down like this, all the way to the bottom. Yeah. If I sum all this, excluding the ones at the top, can you see that the figure at the bottom here tallies with the figure at the top here? That tells you that I have covered all the various categories within my cost of sales. Yeah? Okay. Kindly pardon me. Let me pick a call. Person seems to be calling me often. So let me pause for now. Bear with me. Kindly bear with me. Okay, so back to where we are. Sorry for the break. So now, with this now, if you understand the concept here, all we're just doing is copy and paste in every other place. So the only thing I need to do now is put in the absolute referencing. So absolute as the function here, ABS. Yeah. So I can copy and paste here, and I can drag down with Ctrl D. So now with this, I can just simply highlight here, copy and paste, right? And I can put my total. Yeah. Same here, I can copy for these two categories and paste, and I can have my total. Same here, I can just copy and paste and have my total. I can copy. Okay, for this particular one, because I'm summing based on interest expense, I'll use this first one because I'm using that column, right? And I can paste here, and that's fine. For income tax, this is what I advise. For income tax, we need to be careful. So in this particular scenario, we're assuming income tax opening was 0, right? But for the charge for the period, there are two approaches. I can create an income tax expense, right? Here, income tax expense as a category here, so that if I copy this formula, I can paste it here, and it gives me the figure there. I can easily come here and say, this is equal to the figure down here, right? Now, if I am aware of a particular payment, I put the amount that was paid, right? But if there's no payment, I leave it that way, right? For the sake of this class, we're assuming that what we opened with was paid for in the next period, right? That this was paid for. So our opening is our last month closing, and we can have it all the way down here. Yeah, 3609. Yeah, and that's fine. 3609 CB, let's go to income tax liability, 3609. Yeah, so that'll be a problem, and that's fine. So you can easily do that check and check that it's fine. and we are fine at that level. Yeah, so we explained the fact that in this particular scenario, this particular business does not require this. So we don't have that. But if it requires in your own scenario where in the nature of the business you're doing, you have the classifications and you can break it down based on that. You can just simply continue our copy and paste. Here we drop it, copy and paste, cash and bank, copy and paste, trade and other payable, we highlight like this, copy and paste, borrowings, copy and paste. So no short-term borrowing, which is good. Share capital, similar to what we did for income tax. We would also do the same, opening, share capital. So in the current period, in this particular scenario, if you look at our trial balance, share capital, yeah, share capital, see share capital and share premium here. You can see that they close with 5 million. They open with 5 million based on 2019, and the current year you have about 7.2. So automatically we can tell ourselves that the business had an opening of 6 million. The business has been in operation ever since. So it's not like they issued it in the current period. So you can easily just put in our notes, have our 6 million as opening, right? Yeah, there are no shares issued, so you can just do this. Our opening in current period will be our closing from prior period, right? Based on what we noticed there, we can easily come here with share equity. If you look at our TB mapping, we call it equity. Just as a way to check like we did for income tax, you can do something similar for equity. Put the figure here and just drag our formula here. So, okay, let me change the retained earnings to retained earnings and separate it from equity. So let me change retained earnings to retained earnings. Yeah, so that it doesn't flow. So if I go to my notes here, can you see that it has changed, which is fine. Like I said, the business issued 1.2 million additional shares in the period. And we have that, and we close. Now we come here, right click. Based on that, if you look at this and this, you can see they are the same, right? And we are good to go. Now, this already depicts what we hope to achieve, and we are fine at that level. Similar to equity, retained earnings also have the same principle, right? So, for example, our TB opening, if you change this to, let's say, for example, let's use retained earnings again. Copy retained earnings to our notes. Retained earnings. You can easily do something similar what we do for equity here, copy and paste. Right? So easily, our opening is our opening retained earnings. Our profits, which we pick from the P&L in the current period, you go to IS. So at the time we do our profit after tax, you can easily pick it from there, which you can copy and paste here too. Right? We can sum all the figures here. If there's dividend, we put in the amount.
I think there's an error there.
Where?
That retained earnings, you pasted absolute. I don't think that's formula.
Okay, sorry. So just copy. I don't know why I was doing that. Yeah. So I have it this way. So I can easily copy this and paste it here, and we have our figure there. Right. Okay. So I have retained earnings. I'll put our profit here. We said our opening will be our last previous period's closing, right? We have our profit here, close here, total sum equal to, and we have everything here. So I like everything. Boom. Yeah. So now with this, we have our totals here, right? We're not really bothered about the formatting at this level, but right now we've done all the notes. So all we just need to do is go to our face of our primary statement and link. So revenue is equal to, go to the notes, pick revenue, right? I can easily just do Control R and it copies the cost of sales. I come here, note level, pick my total for cost of sales. But now, for cost of sales, I put negative sign, right? Control R, this, I can sum the two of them. Control R again here, to have my total. Operating expense, put my negative sign, go to my notes. I'm picking my total for operating expense. Control R again. I can easily do my gross profits plus this to get my EBITDA. Control R. Depreciation, go to my notes. Picking my depreciation, put in the negative sign. Control R. Amortization, negative sign, go to my notes. Pick it here, and bring it here. Yeah, I have that. With this, I can easily do my EBITDA plus my depreciation plus my amortization. I have it here. Control R. Income tax, interest expense. Yeah, I go to my notes. Select here, put the negative sign. Okay, I think there's something I missed, and I think has to do with so in the trial balance, I think the business had a disposal. That's this line. This line was omitted, right? In our statement of our face, right? So for the purpose of this class, I would include this within my operating expense. Oh, no. Yep. It's not going to be a operating expense, but I'll put it here. I don't want us to now go down and start creating a note for it, right? I'll bring it from trial balance, other income and expense, right? Figure here. I can easily just copy and paste. In this particular scenario, this was a gain on disposal, right? And not a loss. So I come to my IS, call it other income. Yeah, still within my notes 3 is an inflow. Yeah, so within this, I can now add that other income as a line. Yeah, so I have my interest expense. I can easily add my EBIT plus my interest expense. Income tax opening, I go to my notes, income tax, see the charge, select it, my negative sign because I'm outflow. Yeah, can I add my profit before tax to my income tax? Yeah, and I have all that. With this, I can format properly. Boom. Yeah, so someone else could want to bold, underline, do what you want to do, bold, EBIT, bold, profit before tax, bold, profit after tax, bold. Here, I can do my final underline. Yeah, so that brings my income statement. For someone else could actually now introduce a column, right? Now you can start putting like percentages. So for example, what is my gross profit margin? I can do my F4, right? Holding Control Shift and percentage, it gives me a percentage there. Someone is sending a message. Okay, someone said I should recap the breakdown of income tax expense in the notes. Okay, I'll do that. Right, I have this as a breakdown here, clearly showing my gross profit margin. And we want to show what my EBITDA is. Someone else wants to know what is my expense as a percentage of my total revenue. Right, I can easily put the negative sign so that it doesn't show negative there. So my expense account for like 37% of my revenue. Someone wants to know what my EBIT is as a percentage of my revenue. Someone wants to know what my profit before tax is as a percentage of my revenue. Someone wants to know what my profit after tax is a percentage of my revenue, and I have all that. I can do the same thing for my comparative, this divided by this. I press F4 to lock it. You press Control Shift and 5 to turn to percentage, Control B to bolding it, Control C, and I do that same here. Yeah, so that way some level of analysis can be done. Now, depending on what we hope to achieve, I can have my variance in Naira. and in percentage. I can have my variance as a percentage, right? Where I can now do compare last one against this, right? Where I just simply do this minus this, and I can have that. Yeah. Yeah. So I have all that. I cannot express them, my variance as a percentage. So I can do this divided by previous period, do my percentage sign, so that one else can identify, oh, what has changed? How my previous periods deviated from my current period, right? And I have all that. I can easily use an if error to suppress it. If error, just put a 0 and close it, right? Hold on, someone is knocking on my door. 2 seconds, please. Okay, so now same approach I adopted for income statements, we'll do that for PP. Just do equal to where the note is on PP, right? R here. Someone was trying to say something. Okay, so someone asking for shortcut for percentage is Control Shift and 5. Control Shift and 5. That's all you need to do. Control Shift and 5. Right. So if I want to, I will show you this again. So equal to note intangible. Right. Control R. I have all my non-current. I can do alt equal to get my total. Control R. So someone's trying to send a message. Yeah, Control Shift and 5. Yes, exactly. Inventory, we said there's none for this particular stuff. So trade and other receivables, go to our notes. Yeah, we don't have a total. So let's go back to the notes and provide a total for trade and other payable, trade and other receivables. Right. So you can go to our IS, sorry, statement of financial position. Yeah, click on notes, total there, press Ctrl R. Same thing with cash, we need the total there, bank. And come here, equal to notes, total. Yeah, and we have our total there. Same with trade and other payable. Let's see places where we need totals and we don't have totals. Total. Borrowings, if we had current elements, we can just put totals there. Yeah. So trade and other payable, statement of financial position, equal to, go to the notes, pick the figure there, Ctrl R, income tax liability equal to, go to the notes, income tax. I think if we had income tax above, select the bottom, Ctrl R, short-term borrowings equal to, we didn't know there was no value there, but just in case tomorrow there's a value there. Yeah, Ctrl R. You can find our total of all our current liability. Same with this. all our current assets have total together, right? Long-term borrowing equal to, we go to the notes, select it, press Ctrl R, and we have current borrowing. Share capital equal to, go to the note, share capital, total equal to, Ctrl R. Retained earnings equal to, notes, retained earnings, check our retained earnings, close our retained earnings, right? Okay. Now, by default, now this is something that has come to our attention. If you notice, by default, what we have as retained earnings based on our trial balance should actually be equal to 41, right? We'll find out what happened, then based on that, we'll know what to do. So possible results could be that there was dividend declared or dividend paid, right? And we need to factor in that, and that's why the figure do not tally. However, let's continue what we're doing. We have our totals here, right? Now we can easily do this. If it is a business that is interested in their changes in working capital, we can easily confirm what our net current asset is. Yeah, but we can easily do total current assets minus total current liability. Have that. Yeah, and we have it as a special category, and we can create space for it, right? We can actually have our net assets, which will basically be our total current assets plus our current assets minus our long-term liability, non-current, right? If you see this is not properly formatted, let's do this. Okay, so let's see. Now, obviously, there's a difference here. Yeah, so obviously, that means most likely there's a line we have missed out one way or the other. Just need to identify what that line is. Let me go back and see if there's a category we missed out. Oh, there's actually inventory. So there was inventory, right? Or just purely inventory. But let's say for the sake of this class, in the notes, other inventory, table of contents. I can go to my notes. Yeah. Like this. Yeah, so let's go back to statement of financial position. Thank God we had an area for it. We had this. Yeah, so the difference is now 1.57. Let me see if there's any other line that we missed out. Yeah, so total. So let's look, what did you miss out possibly? So let me even check within operating expense. If there was any line we missed out, let me check. 23,853, IS 23. Okay, so there's obviously something that we missed out in the classification of operating expense. Let me quickly just do that. I will identify it now. Control C. Let me remove duplicates. Home, data, remove duplicates. So what has happened now is that there's a category within the classification within operating expense that I think has been omitted. So these are all the categories. Let me see. Let me go to my notes to see if I did on operating expense and see that I have everything there listed. Yes, professional service was omitted. If you look at it, we don't have professional service. And as I was telling you, that you have to be careful in terms of all the classifications. So in particular category, we've missed out professional services. So I need to bring out professional service as a category here. Yeah, and I've introduced it. Based on that, I don't have a difference here, but I have a difference here, right? So this seems fine. What is the difference here? 131. So let me see. Let me go to the notes. Let me go to my cash flow. So not my cash flow. Let me go to my retained. Yeah, okay, so this is fine. All right, so my closing retained earnings and what I can see based on trial balance are the same. So that means what I've done was okay and no problem at that level. So now the next thing is to identify were there lines, is there any other line? This is 65. Oh, it was an expense, not an income. This was an expense, not an income. However, I treated it as an income, if you remember this line. Yeah, so let me go to my notes. Let me turn it to other expense. Just put a negative sign. So with that, this is fine, right? And that finalizes our income statement and statement of financial position. So let me quickly go back to the question that someone asked me about the income tax movement schedule. Now, the income tax here that we have here, right? I have my opening, so basically, for most of some critical notes, it's good to have them as movement, mostly those that one way or the other have an impact on your cash flow. Typical examples of things that have impact on your cash flow is your income tax, your share capital, your dividend, right? Your borrowings, right? So this kind of notes, you may require a movement so that if you disclose them properly, when you're paying your cash flow, you just be linking them to what you need out of them, the cash elements in them, right? And that helps you, makes your work simple. And also it helps you present the data in a more structured approach. So like, for example, when we're preparing the cash flow, these borrowings, we'll create a movement schedule for the borrowings, whereby we'll show how much did we open with, right? How much drawdown, that means if you took down new loans, payments on the loan, right? And you have your closing. In the case whereby you have a loan that is in foreign currency, you also want to have the unrealized exchange difference. Yeah, because one way or the other, the exchange difference on the loan will also impact the movement. So you have such a movement schedule and you have it like this too. And it will help you in your preparing of your cash flow, right? So the income tax one, what I'll explain again is that basically for income tax, you have an opening. You have a chart for the period, which is your income tax expense. By default, this, what you have here should tally with your income statement, what you have in income tax expense, right? So that means this must tally with what you have at this level here, right? The next one is that the payment, right? You know how much you've paid. So you put that, it's not on the, obviously your income tax payment will not be on the face of the GL. You'd have been able to get supporting document that shows you how much income tax you've paid. That way you put it at this level here, right? At the end of the day, by the time you do your opening plus charge for the year, less your payment to give you a closing balance. Now your closing balance should agree with your, if you go to the trial balance, your income tax liability GL In this particular scenario, if you look at it, income tax liability, yeah, see it here, right? See my income tax liability. If, for example, now I do what I did in my note level for income tax expense, copy and paste, right? And I paste it here. You see that it agrees. Don't forget, it's not every time that your income tax expense, your income tax liability is because of a particular scenario. So it's a mere coincidence that you are saying that your income tax expense and income tax liability are the same. It's possible that at the time you are preparing it, the business has only paid 50% of the income tax liability from last year. It's possible it has not even paid at all. So it's a mere coincidence, which you need to understand that here, right? I don't know if there's any other question from anyone. Any question? Because right now, the way our position where we are, we're actually done with what we hope to achieve today. So I will just leave room for questions as regards to what has been done now. I don't want us to rush the cash flow. I want us to look into this, get familiar with it, then we'll treat cash flow separately on its own.
Sir.
Yeah, I'm listening to you.
Okay. Can we get the video before the end of today so I will practice and prepare against tomorrow?
No, that's fine. So usually the upload takes a while. So there are two approaches, right? Naturally, I expect I will upload it to YouTube, which is my preferred form of giving out the data and all. But I would try and see what I can do in terms of getting across to people in another means. But actually, my preferred source is actually YouTube. But because of you want to use it, right? Yeah.
I prefer YouTube. Personally, I prefer YouTube too. Right?
Yeah,
yes.
It takes a while to upload to YouTube. So the last time it took a while. I will start the process immediately after the class and start the upload, right? So another thing that I wanted to bring to your attention for those who may be interested, I don't know how many of you heard about the Mini Accounting Academy.
The what?
The Mini Accounting Academy.
No, I didn't hear about that.
So let me see if I can get it to you. So now there was a full-fledged class, right, on the Mini Accounting Academy, which covered this management account and some other courses. There's a recording available. I think it's for a token of 4,000 naira. I'll share it in the group in case you want to buy. So it covers more than just the management account. It covers the management account, covers chart of account and some other things within accounting, month-end schedules, preparing management accounts, taxes and all. But a recorded video, right? I think the class was for 5,000, but for those that could not make it, there's a recording for 4,000 naira, which you can easily pay for. So that's that part. So for those asking for the workbook, for the purpose of this class, I would avoid sharing this workbook. The idea is that I want people to actually try it. So because the trial balance, people have it, I want people to be able to recreate what has been done. Maybe at the end of tomorrow's class, I share everything with everybody, right? But it's good that you actually try your hands on it and try and see that you can be able to come up with this, right? So I will not share what I've done. I can only share you the trial balance and the data required. I think I once shared that. Let me check if I have the data again for the class. Yeah, I have it here.
Could you please share it here?
Yeah, so I will share it in the group.
On Telegram, you mean?
No, so I'm sharing it here within this.
Okay. Thank you.
I said it here so that I can pick it. Then for those asking on Telegram, I will share it on Telegram too. So Telegram. I don't know, I cannot find my Telegram. Oh, Telegram, yeah. So I'll share it on Telegram. Yeah. So I look forward to you enjoying. So if you want more like other stuffs, yeah, you can pay for the course, the pre-recorded video, the mini accounting academy that they cover the lot of stuff apart from this. Right. So that's on the side. I've shared the link so you can, if you want to, you can just pay for the recording of that one. Right. But however, right now we covered cover page all the way to statement of financial position. So I left a cash flow, which we'll cover tomorrow. And by then we'll be done with the praying of management account. Any question again?
What time tomorrow?
Same time, 2 to 4.
All right.
I'm always worried when
Okay,
people
you shared
ask
your number. Can we contact you for?
Yeah.
Hello, sir.
I'm
Yeah,
listening.
you shared your number earlier. Can we contact you?
Yeah, sure, you
If
can.
there
That's why I
is
shared the number. That's why I shared the number. This one, the number is so that you can reach out to me. So the idea is that if you are trying it out, that means that's when you need to call me and ask me questions. I actually want people to try it out and let me know. Right. Really. And that's the basis behind me sharing my number. But it would be nice to hear people actually give feedback and say this is what they've tried and let's see what the outcome is.
Okay.
Yeah. So
Sir, for now, no question.
no question, no problem. So I will share the video of the last class or the previous class again on the group chats. Yeah, and don't forget to subscribe to the YouTube channel. Right? So in the absence of no question, that brings the end to the end of today's class. I hope I've added value to you, and I hope that you're a better accountant in terms of how you prepare a management account at work. And I hope to hear good news from people sometime in the future. Yeah? All right.
Okay, sir.
All right. Take care, everyone.
And you too.
Yeah. All right. Bye-bye.
Yeah, see you tomorrow.
Yeah, you too.